In this video, after 7 years of trading experience, I'll reveal the secret of making $5,000 profit daily through trading. No way! Forex trading does not guarantee fixed profits. There will always be losing days and streaks. This is a challenging profession, and anyone claiming to get rich quickly with instant strategies is misleading. Those on social media who advertise such claims didn't get rich through trading but rather through expensive courses, affiliate marketing, or signal services. However, I'm not saying that profitable trading is impossible, only that it's a result of a long learning process and extensive practice. In this video, I'll provide you with some useful advice on how to become a profitable trader. Step 1. Determine the trend. Always trade in the direction of the trend to increase your winning percentage and risk-reward ratio. Begin by analyzing higher timeframes. I recommend the 4-hour chart. In this example, we have a downtrend, with lower lows and lower highs. However, the current price action suggests a range, which means uncertainty among buyers and sellers, often preceding trend reversals. But now, we're seeing the start of an uptrend, with higher lows and new highs. Step 2. Find entry points. Wait for a correction. Fibonacci retracement can be a valuable tool. Prices often turn around the 50-61.8% Fibonacci levels. Other confirmations can be trend lines, moving averages, or support and resistance levels. Here, we have a strong support level, reinforcing the buying opportunity, and the 50-period moving average acting as dynamic support. For better timing, switch to a lower time frame, like the 30-minute chart. Here, we see a smaller trend forming, and when it breaks, it provides a suitable entry point. In this case, the trend already broke, and the candles closed above the previous high, signaling a continuation of the uptrend. Step 3. Set stop loss and target levels. Place the stop loss just below the last swing low. Set the target at the nearest strong resistance levels, or, if the price is in a channel, aim for the upper channel line. Many traders use Fibonacci extensions like 127%, 138%, or 161%. For this example, I place the stop loss here, target 1 here, target 2 here, and target 3 here. Step 4. Risk management. The golden rule is to risk only a maximum of 1% of your capital per trade. For example, if your account balance is $5,000, size your position so that if your stop loss is hit, you only lose 1%, $50 in this case. You can calculate this with an online calculator, like this one. Input your account size, risk percentage, and stop loss distance in pips, 70 pips in this example, then select the currency pair. This will help you determine the appropriate lot size for your position, in this case, 0.07 lots. Position management. Now, let's see what happens with our trade. There are various ways to manage your trades. One practical method is to close half of the position when it reaches the first target and move the stop loss to break even, then wait for the second target. In this example, we reached the first target and the trade started anew. We wait for another correction, observe the price action, and draw a trend line. When the price breaks above the trend line and the last high, we establish a new stop loss and target levels. We can close half of the position when it reaches 50% of the target and move the stop loss to break even again. Finally, we reach the target. Final advice. Psychology. Never increase your stop loss distance. Fear of missing out, FOMO, may lead to impulsive decisions, which can be detrimental to your trading. If you missed an entry point, don't chase the market. If you're facing financial problems, don't trade. Risk only the amount you're comfortable losing. Avoid trading in distracting environments or when you're tired. Don't revenge trade after a loss. Limit your daily trades to 1 or 2 to avoid overtrading. Always risk a maximum of 1% of your capital, and never increase your position size to recover losses. Always use stop loss. Lastly, if you're a beginner, practice on a demo account until you consistently profit. Otherwise, you'll lose significant money on a live account. If you face consecutive losses on a live account, take a step back and return to your demo account. That's all for this video. Share your feedback. Don't forget to like and subscribe. Thank you for watching.